price to cash ratio, a paramount metric used by professional traders and analysts all over the world. A ratio below 10 is ideal. Apple currently sits at 24 and Microsoft's is over 30, and they're in the top 2 positions in the NASDAQ 100. So which company has the best price to cash ratio, and more so than any company in the NASDAQ 100? GameStop. Now there is a shocking answer. Hey guys, Corey here. Welcome to the channel. If it's your first time stopping in, be sure to subscribe and tap that bell so you know when I post new content. And if you could give me a thumbs up, it would be greatly appreciated. I love GameStop. I always have. I'm a gamer at heart. I grew up in the 90s playing video games. But you know what? Funko Land, EB Games, Electronics Boutique, Babbage's, they're all gone. GameStop bought them all out. And they haven't been doing too well until Ryan Cohen came over to GameStop. Then there was that whole fiasco a couple of years back, which really didn't help any matters at all. They've had declining sales really just due to the fact that we're living in an age where everything's digital. So people just don't want to line up for midnight releases anymore. They get their games at midnight or earlier in digital releases. I've been talking about this and it's been pretty exciting, but I've been telling my students we have to wait to see what goes on with GameStop. And I've been teaching my students how to invest more maturely and a little bit more properly and with less risk, and GameStop always seemed to be somewhat risky to me. However, I was kind of proven wrong on a few fronts, and I could have invested in GameStop a couple of months ago, and up until a few weeks ago I had an opportunity to get in at $9 or $10 a share. Kind of wishing I did. However, I've got a lot of information here that I want to talk about, and I talk with my students about this kind of stuff in the Discord all the time about upcoming news. And one of the things I really stand by with my students is making sure you do all of your due diligence. Price to earnings, price to cash ratio, forward-looking PE ratio, EPS on the stock, previous quarter's earnings, trailing 12 months, EBITDA, and a lot of other things. Net income, pre-tax income, those are okay, but those numbers can be fudged. Cash flow is a very important metric, and I teach that to my students as well. And I really take a lot of pride, and really I'm driven by helping others. So if you guys are interested in becoming a part of my Discord and you want to take my training course and you want to be involved with me as your one-on-one coach, I would love to help you to better your portfolio, help you grow, and just help give you overall more financial freedom, more time freedom, location freedom. However, the only downside, unfortunately, is that I'm very limited on space. I wish I had more than one brain and multiple arms so I could teach everybody at the same time, but unfortunately that's not possible. But I love what I do, and I literally every day wake up happy coaching my students, and I really want to help as many people as I possibly can. So if you guys want to sign up or you guys want to check it out for more information, be sure to check out investwithcorey.com right there on the screen or in the information box below. I'd love to have you guys, and I'd love to meet with you and help better your future. So let's go ahead and hit the topic at hand, which is GameStop. I got my fact sheet right here ready to go over. It's a big list and a lot to talk about, so let's get going. First, I just want to point out I'm not a financial advisor, and this is not financial advice. I'm just here to give you guys tips, strategies, news, technicals, fundamentals, financials, and just give you overall market sentiment and guidance. However, it's ultimately up to you to decide which stocks you want to buy or put your money into, and how much of a position size you want to have in that stock, or options and strategies, as it's your money. GameStop was selling every single day, selling shares, trying to raise money for the company. 45 million shares raised just under $1 billion. Then they sold another 75 million to raise $2.1 billion. They've raised $3 billion. They're sitting on $4 billion in cash with no debt. Their market cap is $10 billion. So they have 30% of their market cap in cash. Actually, 40% of their market cap in cash. They could close 3,000 of their worst stores and just pay off whatever they owe in rent, let go of their inventory, not even have to worry about it, and start another business under GameStop without even having to think about any issues. They could close all their stores, get out of all of their leases, start over, and still not have anything to worry about. All the shorts and the bears got squeezed out so bad they're literally gone. If not all of them are probably gone at this point, which is why the share price has been holding in the mid to high 20s. There was a really big squeeze, and it went from $10 all the way to 60, 70, 80, came down and went back back up again. And what's happened here is, I guess you could say, similar to a gap fill. The price moved so much, everybody who was short is out. There's no trust in here to short the stock. You could go bankrupt shorting GameStop right now. So you could say this was a true short squeeze. Most of the traders and investors that are in GameStop right now, a big portion, and maybe even all of them, are long. GameStop issued a statement that the 10Q filing says that they are going to use the money for acquisitions and mergers. At this point in time, GameStop could be considered a SPAC, which is a special purpose acquisition company. If you guys don't know what that is, a SPAC is a publicly traded company for the purpose of acquiring other companies or merging with them. GameStop has a lot of potential here because they've got the money. And a lot of people are talking about AMC, BBBY, which is Bed Bath & Beyond. There's a few other companies, but because of the cash that GameStop is sitting on, they are most likely going to revolutionize the gaming industry as far as how we buy, trade, or even get into midnight releases for games. This is going to be like really huge in the future. They have the cash, they've got the ability to do it. I don't know what their plan is ultimately, but I can tell you one thing's for sure is this very well could be similar to Nvidia in its own way. Sure, this isn't AI, this is retail, but for retail, this is huge. GameStop could be at $100 a share in the next 6 months to a year. I mean, they just hit $60 to $70 a couple of days ago. Sure, that's not going to hold right now, but when you think about it, they have more cash, they're sitting in a better position, and they just overall have more growth potential than even Best Buy does at this point. And Best Buy is well over $80 a share. So when we sit here, is there anything that Best Buy is offering right now better than GameStop? Yeah, a lot. They have physical stores. They offer a wide range of products. However, with all the cash that GameStop has, there's no saying they can't acquire or merge with other companies and eventually be in a position similar to Best Buy, but maybe just video games and electronics where you can buy TVs as well. Who knows what they're going to do? But with this much money and basically them being a special interest acquisition company sitting on $4 billion in cash, and they have a very big cult following, and Ryan Cohen is very smart CEO, this could be Chewy number 2. It goes without saying that the growth potential of GameStop is pretty much second to none in the retail space. The only company in the stock market right now, in my opinion, that's going to match anywhere near the growth of GameStop's potential going forward, if they live up to their potential, that is, would be Nvidia, Palantir, SoundHound, but SoundHound's not proven yet. Really, Palantir and Nvidia, the big AI plays right now. Unless you're in AI, tech, software, and hardware like that, AMD, Google, Meta, Netflix, Microsoft, those are the big ones. Apple, if you're not one of them, then really the only other company that's demonstrated anything close to this is GameStop. In fact, did you know that GameStop has a 3? That's right, a price to cash ratio of 3. Apple's is 24. They have a better price to cash ratio than any company in the NASDAQ 100. Microsoft's is over 30. 10 is a very strong, good number, and anything below 10 is ideal. Apple and Microsoft, Meta, they're all over 10. Actually, GameStop is just below 3. And they're sitting on $4 billion in cash. Actually, a little bit more than $4 billion in cash. Another paramount metric besides price to cash ratio is year-over-year earnings growth percentage. For the trailing 12 months, GameStop's year-over-year earnings growth percentage is 112%. This is staggering, and this metric places GameStop above 99 of the 100 companies in the NASDAQ 100, which means GameStop beats 99 out of 100 of these companies in year-over-year earnings growth percentage, and they beat all 100 companies for price to cash ratio, which is a value and metric that's based off of cash flow, which is much better than revenue. Because remember, like I said before, you can cut 100 lawns for $10 and have $1,000, but if nobody pays you, your cash flow is 0. So your revenue means jack if your cash flow is 0. So with these metrics, with what I said, it shows you how strong GameStop is, making me really kick myself in the butt for not getting into GameStop. You know, I really wish I had have. It would have been great. And I'm not talking about the short jump from 30 to 60. I'm really hard on myself for slipping past this or letting it slip by me. Not a good move on my part, but it's really really been a meme pump and dump stock until these numbers are out. Now, there's no definitive answer. Like, I don't have a crystal ball, and I'm not saying go dump your whole portfolio into GameStop because that would be silly. Right now, I would dump 10 to 15% of my portfolio in a strong company like Apple. I would dump 5 to 10% in a company like Palantir that has potential growth, and I would dump 5 to 10% in a company like SoundHound or SoFi. But with GameStop, it's really hard to say exactly because GameStop could really shoot to $100 and then stay there indefinitely, and you could miss out on a great opportunity, but could also drop to $10 again. However, there's one key factor I want to point out, one really important metric that says that investing in GameStop is actually a good idea and not a bad one. And that is, like I said, the price to cash ratio and the year-over-year earnings growth percentage. Because they could close all of their GameStop stores and literally just operate as a SPAC. They could just merge and acquire companies like AMC, Bed Bath & Beyond, other companies. Those just to name a few. And that alone makes them an acquisition company, a SPAC. And you could invest in a company like that. If they're doing a good job and they're merging and acquiring good companies, that in its own right could put them onto a path to where they could be worth $50 or $100 a share. Not even talking about their games or what they're going to do with gaming or electronics or with their brick and mortar stores. So realistically, GameStop is worth investing in. I don't know how much of a percentage I would put in. I would think that 1 to 2% ultimately, no problem. If you have a $100,000 portfolio, you could buy 100 shares and it's not even worth worrying about, because even if you lost 2 or 3 grand, you have 100 grand. If you got a portfolio of say $200,000 or $300,000, you could buy 300 shares. I would say 1 to 2%, no worry. 2% to 5%, as long as you're selling covered calls, you're fine. If you can get in at $28 a share, sell a covered call for $35 a share, and you get assigned and you make $200 on the 100 shares plus the $700 on the shares themselves, and you make $900 on 3 grand, you're in a good spot. That's what I would do. I'd buy 100 shares, 200 shares, whatever is 2 to 3% of your portfolio, and I would just sell covered calls. You can make a lot of premium doing that. I think this is a strong play, but it's a risky one. I cannot, in good faith, tell any of you guys to invest more than 3 to 5%. If you've got a big portfolio, like say more than $200,000, 5% is fine. If you have less than 100 grand, then 5% is also fine if you're willing to take the risk. 1 to 3% is ultimately safe. I teach my students this because I care. I don't care about my students getting rich quick. If I could do that, I really would, because I want my students to have financial freedom, because I don't just consider them students. I consider them family. I consider them, my equal. I don't feel like I'm better than my students or my family members in my Discord or people that have entrusted me to teach them. So if I could snap my fingers and everybody that's working with me could just have total financial freedom instantly, I would do that. However, I can't do that in good faith because we know that perfect world doesn't exist. And so when I teach my students, I really teach them in a way where they have slow, steady, safe income, because I don't want my students, my family, to lose on this video watching it. I'm sure they'll comment below and say the same thing, that when I teach them, when I coach them, I care. So I can't recommend you to buy GameStop at more than ultra safe or 1 to 2% and up to 5% still being generally safe. If you want to take a very big risk in GameStop, up to 10% is still doable. If you have 100 grand, putting 10 grand is fine. Anything over 10 grand though, I can't recommend that. That's on you guys. I'm not saying it's bad or good. I'm just saying I won't do that to anyone because I don't want anyone to lose money and I don't want them to miss out on money, but that's why I have rules and I teach these rules. So if you guys are, again, like I said, interested in being a part of my Discord or you want my one-on-one coaching and mentorship, I would love to help you. You can do so at investwithcorey.com/learn. The link is right there on the screen, as well as in the information box below. I just want to read something right quick. GameStop's exceptional price to cash ratio and earnings growth percentage underscore its potential as a deep value play in the current market landscape. As investors, we continue to search opportunities that offer a blend of undervaluation and growth potential. GameStop's compelling metrics position it as a stock worth considering for those seeking to uncover hidden gems in the market. Pretty much everything I just said from a top analyst. So let's take a look at the chart. Now we can sell puts as well as covered calls once we get assigned, or if we just want to buy the stock outright. Look at this graph. Before May of 2023, GameStop had literally like no volume. The price only moved between like $10 and $11 for 2 whole months. Now, this is a short squeeze. What happens is, I'll explain this. Everybody who shorted the stock was basically selling right around here, and they're waiting for the price to drop to buy down here, but it didn't happen. It came came up, so they ended up having to buy up here at a loss. This basically shot the stock price up even more because there was more short sellers buying back, fueling the fire of all the buyers going up. By the time the price got up here, all the people that were buying in, making profits on the short squeeze, they started selling off. The price came down, so short sellers started selling here again to make back some of their profits. But as the price came down here, they got greedy. Some of them didn't buy back. Most of them didn't. And when this happened, buyers got back. Then Roaring Kitty helped push this and fuel it even more. More short sellers got squeezed out. Same thing happened. More short sellers got squeezed out. This is creating a lot of uncertainty for shorts. And the shorts won't short sell on this stock now, or most of them won't, because of that, which is why GameStop has stayed above $23 now for over a month, just about. Last 2 to 3 weeks, it stayed over $23 to $24. Going forward, I see GameStop really staying along this path. It may drop a little bit. It might even go back down to $18 or $19. It's possible. Anything is. I'm looking for some gaps that have not filled. I see we have ourselves a gap right here, $24.92, and the gap starts at $20.31. We filled most of this gap right here, which means we really don't have much of a gap. It could gap fill back to $19. Worst case, 19. If not, we're going to stay where we are. Things look really strong. It has a really big cult following. Forget all that nonsense. The shorts have been squeezed out multiple times. They're sitting on $4 billion plus in cash. They got a price to cash ratio of 3, and they beat out all companies in the NASDAQ top 100 by the two most paramount metrics you can look at: price to cash, as well as year over year earnings growth percentage. So this potentially could be one of the best plays in history. It's hard to say at this point for sure, but man, the numbers don't lie. And the fact that they can be a SPAC, like I said earlier in the video, and plus we got Ryan Cohen as a CEO, my bet is this is going to be a wonderful play. It's just hard to say if they're going to gap fill and come back down to 19. With certainty though, or with pretty close to certainty, we won't see GameStop fall below 15 again probably, or below 19 again. 15 to 19 is probably the floor right now. 20 seems to be the floor, and the new floor up here at 24. So it's hard to say for sure, but it's looking pretty strong if you ask me, based on everything we've looked at. Let's see how we can get into GameStop. So if we sell puts on GameStop, click on sell, click on put, we'll go 7 days out. Let's just sell at 27 because we want to get in. We can collect almost $200 because the bid and ask spread is pretty huge. Realistically, we could get $2 a share, $200 juicy premium. Even if GameStop was to fall to $26, our break even's 25. This is awesome. If you want to try to get in cheaper, say 26, you could sell 150. We could get about 152 for this. It's just splitting hairs, but we could realistically get this. And our break even price right here would be like 24.50, 24.48. So yet again, a 26 would be great. It depends on if you want to just collect juicy premium or if you want to get in on the stock. If you're just trying to collect juicy premium, then the best way to do it would be to sell like the 25, because then that gives you a break even of 24, which is the floor. And we're going to play this to see how things start out Monday morning. If you end up just buying the shares or you get assigned, let's look at these juicy calls for 1 week out. You buy at $28 and you sell a $31 call, which you're going to make $300 profit or $255 profit. You could really get about $285 for this covered call. So you would make like $285 for the call plus another $255 for the shares. You make like almost $500 profit. Well, actually make more than that. $285 plus $255. You could make about $540 in a week on $3,000. So that is like 15% return almost in a week. That's insane. And if you get away with selling this for a few weeks, you realistically could generate a grand or two in a month or two easily. Let's see what we would get. Let's go out. And we know that weekly is better than monthly, but let's see what happens. We go out to July 26th and we sell. We want to make $500. So let's sell a $33 call. $605. We could probably get about $640 for it. We'll go out to July. We make $640 and we get assigned and make another $455. $640 and $455 in a month. And you'd make more going weekly. Oops. Why did I do $450? It's $455. There we go. So $1,095. $1,100 in 4 weeks. So that's like a 30% return in a month. It's pretty insane. Even if GameStop was to drop to $15, you made $640 on the covered call, which means your break-even price would be $22. This is really good. To be quite honest, what I would do is look to guarantee my win by going further out to August 16th and going only up about $2 to 31 or maybe even 30, because selling this covered call is more or less guaranteed money, because if the price plummets, you get to keep all of this regardless. So we could probably clear $810 on this. this. So if we get in at 28, this puts our break-even price below 20. So unless GameStop falls below 20, we're in a winning situation. And the more premium we can collect up front, the better. Let's see how much we can collect if we go out even further. We go out to October. Let's go out to 30, 985. This is not as strong of a strategy. This is for someone who's looking to make smaller gains or closer to guarantee. 1075, we could probably get 1040, maybe. 1040 to October. So break-even price is $19. So as long as GameStop in 3-4 months down the road is above 19, it's still more profit. But like I said, you know, the month is the best. Anything under 60 days or even better under 30 days is a lot of theta and time decay. So going out a month, if you really want to play it aggressive at $29, you collect $700. That gives you a break even of 21. And if you get assigned, you get assigned. The idea is to make profit. So if GameStop goes to 80 and you get assigned, you made $700 in like less than a month. You can't lose. To be quite honest, it's hard to say where GameStop's going to go. Based on all the metrics that I've done and that I've looked at, I see GameStop's floor, like the hard floor, being relatively in the $16 to $19 range. I don't see GameStop going much lower than that. They were at 11 before all of this mess, before GameStop raised all this money. So I'm being honest. I don't think GameStop is going to go below 19. So I think that's the floor. Now, the only bad thing is you could get shaken out of the stock because it could go to $60. You will not recover from that. If it goes to even 40, you will not recover. You'll be rolling out and up for 2 years to try to make up for that. I mean, you could, but you're going to be breaking even to go up $1 and strike every 2 months. So you don't want to get shaken out. You could buy and hold, but I don't know if I would do that. So that's why the safe play is to go up a lot. So you sell, you go out to July or even sooner. June 28th, let's go to 14 days. We could sell a $40 call for $280 2 weeks out. That means we make $1,200 plus $280. We make $1,400 something in 2 weeks. That's what I would do because the price is more likely to go up than it is down. If it goes to 60, you get assigned at 40, you still made $1,200 on the shares plus the $280. This is like a $1,400 profit in 2 weeks. I'm doing this in my large portfolio. I have 500 shares that I just bought. I'm going to buy 500 more shares. I've got 3 $40 calls and I have 2 $45 calls. So either way, I'm making money. You know, I'm going to be honest. I have nothing to hide. I mean, I wasn't a believer in GameStop until the last, 3 weeks to a month. And I just haven't made a video on it because I don't want to put out videos that are inaccurate. I want to put out videos that make no sense. And after doing all my research, this is still a risky play, but it's not as risky as it once was. So right now, it's really good play. It's shaping up to be good. There's stocks out there that are more expensive than GameStop and they're absolute crap. And we're still making money on it. Like, I'm not saying that this stock I'm about to mention is crap. Affirm, good stock, but they're not profitable and have nowhere near the potential GameStop has. So because it had a meme stock rally and they weren't profitable, they turned it all around. But because of that, there's a bad taste in people's mouth, a bad image. I have nothing negative to say about it. Roaring Kitty and the move that they made, I don't think it's a disgrace. I mean, it's people that are investing and spending money on something they believe in. You know, everybody's entitled to believe in what they want and do what they want with their money. And as a gamer from the 80s and 90s and someone who loves video games in my downtime, GameStop being the last bastion of stores, I think it's a good thing. If I could vote for what I hope happens, I hope GameStop goes to the moon. I do. And I hope everybody makes a lot of money. I hope everybody's happy. And I hope GameStop stays around for a long time selling video games because it's a lot of nostalgia from my childhood. I've got 5 shelves behind me that are blocked out. You can't see them with thousands and thousands and thousands and thousands, tens of thousands of dollars worth of games and game systems. Every game system from the 70s till now. All the games, all the rare ones, everything. So I used to go to Funkoland when I was a kid. With all this being said, I used to go to Funkoland as a kid. Babbage's Electronics Boutique, EB Games, all the different varieties of stores that they have. And now GameStop's it. I don't like to buy games on Amazon or digitally. I still go to GameStop. I do. I really like GameStop and I like it even more with Ryan Cohen. So with all of this being said, I can definitely in good faith say that 1 to 3% of your portfolio is safe to go in. 1 to 3% is safe. If you lose 1 to 3%, it's not a big loss. Sell covered calls, sell puts. If you want to go 5%, that's also fine. That's still fairly low and fairly safe. If you even want to go 10%, 10% is a little more risky, but if you got good strategies and diversifying your portfolio elsewhere and you think you can afford to risk 10%, that's still not a lot, but you have to be really confident in yourself at 10%. If you want to do more than that, like 20 or 30%, it's on you. I won't recommend that at all because I want my students and people that follow me to get good value and I want you guys to make consistent income. I hope that I'm able to provide that for you guys in these YouTube videos because deep down inside, the only thing that drives me right now is teaching and making these videos and helping you guys. I don't need to worry about finances at all. I'm financially free at this point. And so I told myself when I had financial freedom and became profitable that I would give back to others and teach and coach them because I wanted to help others. And so I really care about other people having financial freedom. That's what drives me, helping others and teaching others. And that's what I'm here to do. So if you guys are enjoying the YouTube videos and you guys are loving what I'm teaching here on the channel, give me a thumbs up as it greatly helps the channel grow. If it's your first time stopping in and you enjoy the videos, be sure to subscribe and tap the bell so you know when I post videos. And if you want to become a student and you want me to teach you even more and all my advanced strategies, you want to be a part of the Discord and learn even more so you can grow your wealth better and become financially free, financially stable, and have time, location, and financial freedom, then you can definitely check out my website, investwithcorey.com, or the link in the information box below, investwithcorey.com/learn. The only thing is I have very limited spots available, like I said before, so the sooner you do it, the better your chances are of getting in. Thanks so much, guys, for being here. I really appreciate you. Don't be sad that this video is over. I got another one just for you, and you guys are going to love it. And that video is right here. I invested another $10,000 into Palantir. Click that video and find out why Palantir is going to the moon, basically, and why it is the best AI stock right now and why you should get in before it's too late. We'll see you guys over there. Thanks so much for being here. Take care of yourselves. And remember, let's grow our wealth together.